If you are a trader or an investor, then most likely you've heard of the volatility index, short called the VIX. The VIX represent the market expectation of volatility over the next 30 days for the S&P 500 index. Basically, when the VIX index reading is low, that means everything is peachy and the market usually trends up. By the market, I mean the S&P 500 index and its component. When the VIX index spikes, that means there is fear in the market, there is uncertainty in the market, and usually the S&P 500 index will be going down. But every now and then it spikes. And like all instruments in the financial market, actually like everything in the world, it has a pattern and we can see this pattern. So in this video, we will see the pattern and I will give you the secret on how to trade the VIX index. This is SeasonX, a platform that discovers patterns for thousands of instruments. And here I loaded the volatility index, which again is called the VIX for short. This is the last 10 years. And if I do this, this will detrend. So basically we discover the pattern without the trend. Also, if you click this bug, it will remove the COVID shock in the market. Now, once we do this, we can see usually the trend of the VIX goes down until middle of July, and then it goes up until middle of October, then it goes down again. You can see it here also in the months. Now, this is not a fluke of the past 10 years. In fact, if I go to 5 years, you see it's almost the same pattern. Go down, middle of July, go up, middle of October, go down. And then if I go to 34 years, which is the total data, again, we see goes down, up, and down again. Now, there is a mismatch maybe by a couple of weeks every now and then. But to trade this pattern, the best way to do it is through options. So look at this pattern. So if you go from middle of July to about middle of October, there is 76% chance that you win. And the median return is about 15%. Also, if I switch this to the last 5 years, it's 100% win rate. That means all of them win. In fact, I can fine tune it to do this and still it's 100, but I can make more money. Median return is 41%. That is huge. So this is an amazing pattern. And like I told you, every instrument has a pattern, but the VIX is easily traded with options and futures and an ETF. And you can do all this, but of course, the options and futures are leveraged already, so you don't need to put a lot of money to get the leverage. But with the ETF, you need to put a lot of money. Now, the pattern I just showed you, it's a minimum of 2 months, 2.5 months maybe. So it's a long pattern. Yes, high win rate. Yes, the median return is high, but it's a long pattern. But how can we trade the VIX with, short-term trading like I teach in this channel all the time? So this pattern will not, we cannot use this basically. So we need to look for shorter term patterns. Now, before I show you those patterns, let me show you the VIX with the S&P 500 index on the same chart. So here I have data for about 13 years. The orange line is the VIX and the green line is the S&P 500 cash index. And if I zoom like this, we can now see a pattern emerge, which of course we know the VIX moves in the opposite direction of the S&P 500. Or you can say the S&P 500 move in the opposite direction of the VIX. Now, 10 years ago, usually the VIX leads the S&P 500. So you can look at pattern in the VIX and trade the S&P 500. But due to the efficiencies in the market, the speed, hedge funds arbitraging every little thing in the market. So I don't see the difference now. You can look at pattern in the S&P 500 and trade the VIX, or do the opposite. Look at pattern in the VIX and trade the S&P 500. But instead of doing this, we should trade the VIX alone and the S&P 500 alone. And since the VIX is the opposite of the S&P 500, then the easiest way is just to trade the VIX with the same pattern of the S&P 500, but instead of going long, we go short. Now, I've mentioned this a million times on this channel. The S&P 500, it's a mean reverting instrument, that tends to drift up most of the time. And the most successful strategies on the S&P 500 is a mean reversion strategy going long. So that means using exactly the same everything, we will use a mean reversion to go short on the VIX. And because they are the opposite, most every pattern that I showed you on this channel on the S&P 500 will work on the short side on the VIX. Here we are in multi-charts, and I loaded the futures of the VIX index. And this is our first strategy. Since we are going short using mean reversion, so we need some type of pull up. So this is one of them. If the current high is the highest high of the past 5 bars, then we will short and we will exit after 10 bars. So let's apply the strategy and see what we get. So we have the strategy applied now for 17 years worth of data, and we have 261 trades, 65% win rate, averaging $350 per trade. That is really good average trade for the VIX index. We look at return to drawdown ratio is 1.23. That means we have a big drawdown, which you can see here. We're making $91,000 with $73,000, almost $74,000 of a drawdown. And we can see the drawdown, it's happening here. But remember, we are holding for 10 days. We have no stop loss, no profit target. The next strategy is if the close higher than the previous close, and the previous close higher than the 2 bars ago, and 2 bars ago close higher than the 3 bars ago close, then we will go short. Again, there is nothing special here. We are just waiting for a pull up. So first strategy was looking at the highest high. Now we're just looking for higher closes in a row, and then we will go short. Again, we will exit with a fixed 10 bars. And this strategy behaves much better. We have 227 trades with 70% win rate, a lot higher average rate, 677. And if we look at return to drawdown, it's 2.17. Again, it's much better. But still, that drawdown is really big. But now we are making $153,000 with about $71,000 in the drawdown. And the final strategy we will check is the RSI 2 above 75, we'll go short. Again, no surprise here, since I have 100 strategies on the channel going long when the RSI 2 goes below 25. So the opposite is when the RSI 2 go above 75, then we short the VIX index. And this is the results: 258 trades, 65% win rate, and 284 average trade. And the return to drawdown here is almost 1. So we're making $73,000, and we have a drawdown of about the same amount of money. Now remember, all these strategies have a fixed 10-day bar, so which is usually long, since I usually exit within 3 days. But this is the safety exit. We need a better exit if we get it. And usually the better exit is the RSI. So if the RSI goes below 25, then we should exit. And the 10 bar will be our safety net. So if we don't get the RSI below 25, then the 10 bar will click in. So let's add that condition. So this is how the strategy looks like. We enter short when the RSI of the VIX goes above 75, and we exit when the RSI of the VIX go below 25. If this doesn't happen within 10 bars, then we exit. Now, before you take these strategies and add a stop loss or profit target, the first thing you should do is add a filter. So let me test some filters on these strategies and see what we get. So here are the results of the filter, and if I sort by return to drawdown, look at this. Now we have 6, 5, 4, 3, many 3s and 2s. All these are simple filters added to the RSI strategy on the VIX. So this is the first strategy with the filter, 77,000. And now our drawdown goes to 12.5. So it went from almost 73 to 12.5, which of course gonna make this look really, really good. This is another filter where we're making 79 and our drawdown is 16.5. And this is the equity chart. So you see how this goes. You just add a filter and you'll get multiple different equity curves that are much better than the original strategy. So the secret to trade the VIX index is use any successful strategy on the S&P 500 and flip it to the short side. Usually it will work most of the time. Sometimes you will need to tweak the filter. And these are some filters added to strategy 2, which was 3 up close in a row, and then we go short. And we can see again, we're having multiple strategies with over 3 return to drawdown ratio. Let me pick this one. This is making 105. The equity curve looks very, very nice. Of course, you can mix and match these strategies in a portfolio and they will all trade short on the VIX using different filters. So they will trade at different times. If you like this video, then you will love the next video.